So my friends, welcome to a new crypto update video, and with that, welcome to the 500 millionth ceasefire between Iran and the USA. Bitcoin has risen to over 71,000 US dollars, or is currently hovering around that level after we briefly hit the 370,000 US dollar mark yesterday. After the news that there is yet another ceasefire, which was observed for a few hours but now isn't anymore, so in the end we're exactly where we were before. The Strait of Hormuz is still at least partially closed. Yesterday, 4 ships passed through. They want to increase that to 12 ships, but that's not really a big deal. So in the end, we're exactly where we were before. And the moves happening here is just pure scam bullshit. Sorry for the language, but honestly, anyone trading right now without a stop loss, that's absolutely dangerous. But all right, let's take a look at everything now. Let's put everything a bit into perspective, focus less on war, and take a look at what's generally happening in the world right now. Otherwise, before we get started, as always, feel free to leave a like on the video and subscribe to the channel if you haven't already. And of course, you're also welcome to join the free Telegram talk and Signal groups. If you're interested in updates, news, and signals, feel free to join. You'll find the link for that for free down in the video description. And tonight, there will be another live stream at 7 p.m. I know I skipped a video yesterday in the live stream on Tuesday, but hey, with all this back and forth, you know how it is. You can say one thing and then exactly the opposite happens because some Trump tweet or other tweets come out again. But all right. In any case, tonight at 7 p.m. is the live stream. And now let's get started. Bitcoin, as I said, is at $71,000. Yeah, nothing has really changed with all that stuff. Wants to lead Iran talks, as Tehran says, ceasefire violated. So it's back and forth, back and forth. Ceasefire, then no ceasefire. They're all still shooting at each other. In the end, the focus is still on the important things, and ultimately that's the oil market. Stocks relief rally stalls as crude oil rebounds. And that's still the big problem we have. We're actually still mostly trading macro news, or rather the entire macro situation. We can see it quite clearly here. Oil dropped to around $90 a barrel after the news last night. By now we're back at 97, so that's almost a 10% increase again since the drop. This reminds me on a larger scale of back when Trump said there was peace, but only on a small scale. You can see the uncertainty is still there, and that's what we have to go by. And as long as oil remains on this trajectory, or rather stays within this range, and to be honest, not much has really changed. So let's switch to the daily time frame now. We're still at very, very high prices. Yesterday, it was said that only 12 ships are passing through now. Okay, cool. That means the oil price will probably keep rising, and if the escalation increases again, then even more so. We will see prices over $100 per barrel again. We're seeing the same situation, or unfortunately the same thing happening with bonds. Yes, they've dropped. Okay, we were at 4% for the 2-year bonds, and now we're at 3.8%. For the 5-year bonds, we're still just under 4%, and for the important 10-year bonds, we're back at 4.3% after briefly being at 4.2%. So honestly, nothing has changed there either. Japan is still at an all-time high when it comes to bonds. We're still not out of the danger zone. And you don't necessarily notice that now in the stock markets, which shot up yesterday, or in the crypto markets. But as I said, if you look at what's going on in the background, as I said, we are still seeing rising bond yields. We are also continuing to see rising oil prices. In the background, over the longer term, we see another driver of inflation. Wheat moves higher on Iran, ceasefire uncertainty. Wheat prices keep rising, and that's also due to the Strait of Hormuz, because not only oil passes through there, but also fertilizers and other important goods for transport. And these are exactly the drivers of inflation that sooner or later we will end up seeing. And that's the big problem. And in my opinion, the markets are still not factoring this in enough. At the same time, we're now seeing stagflation in the service sector. So there as well, the ISM service PMI fell by 2.1 points in March to 54, and the estimate was at 54.9. That doesn't exactly look like everything is back to being just fine. And as I said, all these events we're experiencing right now, or rather that are gradually piling up, whether it's wheat prices, inflation, oil, gas prices, etc., this will still be a problem over the coming months, especially in terms of interest rate hikes. Let's take a look at the Fed Watch tool. We can see that April is basically safe, and we probably won't get an interest rate hike, not in June, not in July, and not in September either. Strangely enough, the chance is at 1.1%. But the important data is actually still to come today. If we take a quick look at the economic calendar, today the core PCE rate is coming out, very important, as well as the gross domestic product, initial jobless claims, and continuing jobless claims. And tomorrow, the full set of labor market data will be released. That means these 2 days could completely undo the entire rally we've seen over the last, let's say, 24 hours. If you ask me, this isn't sustainable anyway. As I said, nothing has changed. Here too, and this is another interesting point if you just draw a straight line here. So where do we have it? Here. If we just draw a straight line here, we can basically see what happened yesterday. There was liquidity up here, and here is still the inefficiency. We wicked above it twice and closed below on the 4-hour candle. That doesn't look like a sustainable recovery. That just looks like another scam wick, fishing for liquidity to basically stop out the shorts at the top and then head back down. Technically, nothing has changed. Let's dive a bit deeper into the charts again. We see that spot demand is actually decreasing, while perp demand, that is futures demand, is significantly increasing. Let's look at the heat map. Up here, there's a small cluster, which we can ignore for now, but you can see how much liquidity is at 64K at 60 and still at 54K. Let's double check this with high block. Same thing here when we zoom in. In the end, we still see most of the liquidity below us. For me, that still hasn't changed, and not even some ceasefire agreement or whatever is going on out there right now changes anything about that. For me, that's still the most likely scenario. Everything that's happened now, or is still happening, maybe there's just an hour of ceasefire right now, but the problems are still there. The Strait of Hormuz is closed and there's still no oil flowing. Yesterday, oil refineries and a pipeline were attacked again, or several desalination plants. That doesn't look like a ceasefire. That just looks a bit like stalling for time and nothing more. Technically speaking, as I said, this move we saw overnight should normally be retraced. Down here, we still have a nice vector candle down to about $68,900. That means we have two options here. Either you try a small long position and hope that we actually get a ceasefire now, or this whole circus out there drags on a bit longer and we get our next sell-off. And by the next sell-off, I basically mean that this plan here remains intact, heading towards 54,000 US dollars. So nothing at all has changed in my plans at the moment. Whether it's on the heat map or not, we can also take a look at the other volume, meaning the spot order book. 10 million almost only selling happened yesterday, so 24/7 just selling pressure, which even continues as prices fall. And that's what bothers me a bit about the whole situation, because, normally when we go up, there's massive spot selling, basically. When we go down, usually there's massive spot buying. And you can see here, yesterday we were at 72, almost 73K, and now we're already back at 71, so $2,000 lower, and yet there's still ongoing selling pressure. And honestly, I don't really like that. So, and this whole idea that everything will be fine again and whatever else, just be careful and trade with a stop loss. Let's move over to the altcoins. Ethereum was back up over $2,300 yesterday. In the end, nothing earth-shattering happened here either. The volume is still terrible, so we're still basically moving sideways here. In my opinion, this has nothing to do with meaningful price action, at least not here. Then about oil, we've already talked about oil, still at $97, way too high. The dollar weakened yesterday, but it also left a big gap here. We should at least fill that here. Not necessarily a lower low, we've still held that here. So this means more of a sideways phase. If the war flares up again, the dollar will be number one again, and then the stock markets will fall as well. But we can see the correlation between the stock markets and the dollar. When the dollar falls, the stock markets rise. When the dollar rises, the stock markets fall. This correlation is definitely undeniable. Let's move over to our Japanese friends. The yen had a nice bounce upwards yesterday. But for me, that's still not enough to say, okay, Japan is intervening here. It doesn't make sense because yesterday the dollar dropped so rapidly, and that was more due to the war. That's why, at least for now, no intervention is foreseeable here. Let's take a look at the traditional markets. The DAX definitely had an exorbitant surge towards 24,000 points. If we now pull the Fibonacci level from the top to the bottom, we're currently sitting perfectly in the golden pocket. That means we might have to prepare ourselves for the possibility that this whole thing here was possibly an A, B, C, D, E. So up here was the A, this was the B, the C was very exorbitant, then D and E completed. That means we should now have a new 5-wave structure in here. But that also means for us that this here was possibly the 1, the 2, we're currently in the 3, then a pullback, and then we get the 5 like this. And then on a larger scale, we could see a new downward movement. Just to clarify things a bit more, I know I'm going into a bit more detail here, but sometimes that's necessary. We can also see with the DAX that we've hit the 3 level here perfectly. On a larger scale, it's the golden pocket, the Fibonacci extension golden pocket for the DAX. If the 4 comes, maybe down here towards 23,500 points, and then another 5, then I'll probably look to go short again here, if that's how things play out in the next few days. These gaps, no matter where they are, we basically have them everywhere, or rather, in my opinion, these steep pumps are being filled everywhere. Also with the Nasdaq, we're back in the former range, so nothing has really changed there either for now. Here too, just for the sake of completeness, we can draw a fib level from the top to the bottom. Here as well, we're perfectly within the golden pocket. That means this whole movement that we have everywhere right now could be an A, B, and then a C, which could turn out to be even more catastrophic, coming soon, sooner or later. Same game with the S&P 500. I deliberately left this fractal in. Now you're probably saying, yeah, but that hardly fits anymore. Fractals don't have to play out exactly one-to-one. But what's extremely striking here, and otherwise I would have removed it, are 2 points. Point number 1, point number 2. In both scenarios, so also in our fractal, we had this upward movement, which we also had here. So here, wait, let me pull this over for you. So that was this upward movement here, which we also have down here in the fractal. Brief consolidation, then a pump triggered by the news, by the ceasefire, and here this gap, and here this gap. And that's is the only reason why I still have this fractal in play at the moment. For the sake of completeness, we're going to do it here just like we did with the Nasdaq, just like we did with the DAX. Fib levels, we're perfectly inside the golden pocket. That means, according to the fractal, if we go by that, this could have been the upward movement here, and we could also get, on a larger scale, the A, so now the A, the B, and then the C down. At the moment, unfortunately, these are still, one has to say, the most likely scenarios. If somehow the ceasefire is broken now, all this crap will start over again, and we'll probably see exactly this scenario in the stock markets as well. Let's move on to the volatility index, which is still at 22. It has clearly pulled back or had to give up quite a bit, but in my opinion, we're still at a high level. I wouldn't underestimate it yet. We're still absolutely in the trend, that is, in an upward trend. Otherwise, all the stock markets, of course, shot up phenomenally yesterday. Whether it's Nvidia, whether it's Google, they're all on their way now. And for those who remember, we talked about how everywhere, and now let's switch over, I think, was it Palantir or Meta? Somewhere we had 2 or 3 companies that we discussed. Exactly. Here, for example, Amazon, which almost exactly hit our sell zone and thus also completed the B wave. We had the ABC, which went perfectly down into the green box here. From here, we said, okay, if this becomes an A, then this could become the B. And we almost reached the sell zone up here, so also the correction target for a C. And we've seen that, let's say, in several cases. We've seen it with Palantir, we've seen it with Amazon. So if we look at this bigger picture, everything points to us getting another leg down. And with that, the final leg possibly also including the carry trade. I hope you're well prepared now. We'll take another detailed look at everything tonight at 7 p.m. But this video had to be a bit longer, simply to discuss everything that's happened over the last 2 days, and also to focus a bit more on chart analysis again, instead of any bullshit news. It's important, but I'll put it this way. These news could have now set us on the right track to assume we're everywhere starting from wave B in order to then make a final wave C downward. Feel free to share your opinion in the comments, otherwise that's it from my side. Also make sure to check out BingX. The promotion is still running for a few more days, 7 days for VIP 2 for a free month, and of course also the deposit event. Otherwise I'd say that's it from me. We'll talk again this evening at 7 p.m. Yeah, please trade with a stop loss. We'll talk again this evening. Until then, ciao ciao, and as always, stay crypto.